Good morning. This is Larry Edelson for my Uncommon Wisdom weekly video market update. This time I'm coming to you on Monday, August 22nd, and every other week I will be giving you my weekly video comments on Mondays now instead of Thursdays. And in between you'll be receiving a written column alternating with my weekly video updates. Since this is the first Monday weekly video, I do want to mention to you that there will be improvements in the technology, in the length of these videos, and the things I'm going to show you in the markets as we go forward. So please do keep that in mind. And of course, as I mentioned in the letter that you received from me last week, you will be receiving a transcript each Monday, or that is each alternating Monday. Having said that, we've seen a lot of action in the markets this past week. The volatility continues to reign supreme in virtually every asset class, from stocks to bonds to commodities and currencies. And it's hardly surprising when you consider the advancing stage of the sovereign debt crisis in Europe. Thus far, we've learned that Europe will not embrace a Eurobond, which is really their only savior at this moment in time for the euro currency. So that is hitting the markets pretty hard, especially in Europe, and we've seen the Dow Industrials top out. Meanwhile, we've also seen gold rally to yet another record high, in conjunction with nervousness over the sovereign debt crises, but also on the back of Hugo Chavez in Venezuela moving to nationalize the gold mines there. Now, Venezuela is not a major contributor to the world's gold supply. It's not a major player by any means. It ranks 15th in terms of its gold reserves, but I do think that this is significant in the sense that what Chavez is basically saying is we don't trust the dollar reserve system anymore, and we're going to not only call home our gold reserves that are in vaults around the world, we're also going to nationalize the gold in our own country. You can expect to see more of this in the future. It will not happen amongst the big industrialized countries, in my opinion. Quite to the contrary, we're starting to see some rumors circulate amongst the European Central Bank, for instance, that they may sell their gold holdings to raise cash to bail out some of these peripheral countries in the Union. That remains to be seen, but there's going to be both supply situations coming onto the scene and, of course, ongoing demand that's going to drive gold much, much higher in the years to come. However, right now, let's go to the charts, especially gold. I'm going to call up this gold chart, which I've had on my screens following for you for some time now. Yes, gold is moving higher. However, for many of the reasons I've cited previously, I believe gold is going to top out very soon if it hasn't already. We could see gold move up to about the 1875 level, but as I've indicated previously to you, this is not the big move up in gold. The big move up in gold will come when we come out the top of this channel here, which right now is around $2,100 an ounce. At that point, when that does happen, you will see gold staged for a move to $5,000 an ounce and higher. I don't believe that time has arrived yet. Indeed, it might be a couple years off, perhaps as little as a year off, but I don't believe it's here now. I could be wrong, and if I am wrong, we will get an early indication if gold can move into this channel and hold the bottom uptrend line of that channel. I don't expect that to happen. Gold could move to 1875, and then we could see a very sharp pullback. I maintain my position for my Real Wealth subscribers and for any of the mentions that I've made in my Uncommon Wisdom column. Long-term investors should remain long gold. If you are not long gold here, I personally would not be buying here. I would only be buying on a pullback when it comes, or when I give the all clear, which would be a close into this channel here, which right now stands about 1900, 1910. Having said that, I want to move on now to silver. Silver, interestingly, has not confirmed the move up in gold. While gold has eked out made one new record high after another, silver has not even taken out its high of 42.29 from a couple weeks ago. This is significant. It's a divergence. I do believe silver can retest the 42 level, but silver, in my opinion, being more an industrial metal than a monetary metal, is being affected by the slowdown we're seeing in Europe and the United States, and is going to be under pressure as a result of that economic slowdown. Again, I know I'm very much disliked for my views on silver, but I would not touch silver with a 10-foot pole right now. I would only be a buyer of silver on a pullback to the $30 level or a solid breakout above 42.25, which I do not believe will be happening. And if I'm wrong, I will be the first to alert you. Now, I want to go to the dollar index. The dollar index, as you can see, continues to just erode support at this level. It can't rally and it can't decline. That's what I've been warning you about over the last few weeks, that the dollar index would trade largely in a sideways, choppy trading range because it doesn't really reflect the true state of the condition of the dollar. It's largely based on, that is, the dollar index is largely based on the relationship of the dollar to the euro. And the euro and the dollar right now are trading places on the sovereign debt crisis. In the bigger scheme of things, the dollar is declining against the Swiss franc, the Japanese yen, the Chinese yuan, which is at another 17-year high against the dollar, and most Asian currencies. This is not the, we're not here yet for the big crash in the dollar. I do not expect that to happen until the middle of next year. It remains quite possible that if Europe continues to really fall apart, we could even get a rally out of the dollar in the shorter term, in the dollar index up to about, let's say, 79 or 80, which would likely put pressure on the precious metals as well. Now, we've seen a lot of very interesting action in the Dow Industrials, so I'm going to go right over to there. And as I indicated to you in my last column in Uncommon Wisdom, the Dow needed to get above 11,550 roughly in short order in order to negate its massive 17-18% sell-off in the last couple of months. The Dow has not done that. We got up to just under the 11.5 level, and now we are starting to turn lower again. I expect by mid-September that we will see new lows in the Dow below 10,000, and I still have a target of roughly 9,034 on the Dow. That has not changed. That is the short and intermediate term. Long term, I don't want to confuse you, but in my writings and in these videos I have also mentioned that over the very long term, going into a critical turning point that I have in 2015-2016, I expect the broad stock markets to dramatically inflate higher. That will be based on the complete wipeout of the United States dollar as a currency, and stock values in general will be repegged higher, reinflated higher to adjust for that, much like we're seeing in gold. But that time is not here yet, and it will not come, and I will not be buying or recommending positioning for that until we see a solid test of support in the Dow Industrials. And that remains something that we should see very soon. That's it for today. Again, stay tuned. Each alternating Monday, I will alternate between an extensive written column and a video column going forward. I do welcome Kevin Kerr and Rudy Martin to the Uncommon Wisdom team. You will see them during the week as well. And stay tuned to your inbox for a transcript of today's video. And stay tuned for more coming from me and the Uncommon Wisdom team in the weeks ahead. This is Larry.